Hey guys, alright, so with this video, I want to just have a conversation, get my thoughts out on the new wave of investors. So, judging by all the events that have happened over the last couple of days, there's been a lot of angry people on both sides of the fence. And I want to weigh in, and for whoever follows me and sees this video, this is just my advice. I could be wrong, who knows, but I wanted to share my thoughts and have a discussion with you guys on what is the new trend of investors. So, a couple points here. So, this all started with the Reddit army. They're calling it the Reddit rebellion, the Reddit riot, and basically what happened was it's a bunch of people, a bunch of individual retail traders, for as far as we know, that are all on one message board, and they all decided to come together for a common cause, and they were going to take down the hedge funds. These funds were shorting stocks, they were destroying stocks, and you could see by 146% of the shares were shorted. How is that possible? More than the available shares, they were shorted shares. So, I think that's a problem. And Wall Street's been able to get away with that for the longest time, and a bunch of people just decided that they had enough. And they took it upon themselves, they came together, they bought the same share, and they drove the price up. If it's a free market, if it's actually a free market, then they should be allowed to do that. You should be able to buy whatever you want, as much as you want. And yes, there will be people that end up pulling the bag when the price eventually drops, but you know that risk when you get it. That's my thoughts on that. So another big key is to let you know that I am out. I am not in any of these positions, any of these Reddit positions. I jumped in on a couple of them. I made profits on the way up, and I sold them, and then I bought them. Eventually, overall, it was a loss for me, but that's fine. I don't have the stomach for the ups and the downs. I'm more of a safe investor, so that's fine. I understand that. I recognize that about myself. So I just want to let you guys know I don't have any positions currently open in any of these type stocks. But here's the thing that people need to know is a lot of people on CNBC and big banks and old-time investors, they're mad that this is what's happening. They say, oh, the stock price doesn't reflect the true value of the company. It's just gambling. And you know what? That's right. It's true. But everyone knows that. People know that GameStop's not worth $11 billion. People know that $350 or $550 for one share of GameStop isn't accurate. No one thinks that this is a proper evaluation. You have to be stupid to think that this is the actual evaluation of GameStop company. That stock is a $5, $6 stock at best. It's a dying, old school, brick and mortar building that at this point it's not worth anywhere near the share price. People recognize that. But old-time investors have to realize that this isn't the old days where you buy J&J stock and you hold it for 10 years and you make 7% on your money and you're happy with it. The new breed of investors is quicker. They're looking for more profit. There's more day trading. There's more swing trading. People are finding these companies before they pop, waiting till they pop, and then selling. And there's nothing wrong with that. If it's a free market, you should be allowed to do whatever you want. You can buy and sell as many times as you want. You know, they old school just has to realize that this is the new way. This is the way we do it. And that's my opinion. The days of buy and hold, they still are there. And I do have positions that I will hold for the next 10 years. But that's fine. That's one strategy. That's one strategy that you're able to implement. You also should be able to day trade. You should be able to run up a stock if you want. And I understand that it creates other issues with the company because now GameStop is seeing all this cash and confusion, and they're talking about buying stock back, and you can sell more shares, and you can dilute it, and you can raise money based off this evaluation. And I understand that. But that's what you have to do for a free market. It all balances itself out. If they decide, okay, we're worth $11 billion, let's go take out a bunch of money. You know what? Then they're taking that risk because when their stock goes down, and it will go down because that's not the true value of the company, then they're going to be left holding the bag. So that's my thoughts on that. The next thing is that I heard on CNBC they said, oh, new investors they're creating value where there's no value. Dogecoin, EV stocks, and you know what I have to say to that? Yes, we are creating value because we are the future. We're deciding what value will be in the future by buying it. It's the same thing. The old school investors thought Coca-Cola was going to be so big and it was so promising and it turned into a big company. That's great. But it's a self-fulfilling prophecy. If we think EV is the next wave, then we're going to buy electric vehicles. If we think the electric vehicle is the future and everyone starts to go buy Teslas, then you know what? It is the future. Then we were right. So it's a self-fulfilling prophecy. We determine the future because we are the future. There's nothing wrong with that. If we think, and it goes back to just the basics of everything. I'm sorry I'm kind of ranting here, but you give value to anything you want. People give value to Pokemon cards. People give value to gold. If you were stuck on an island by yourself and someone said, I'll give you $1 million of gold bars, or I'll give you 50 fish. What would you take? Yeah, I would take the 50 fish so I can eat, live, survive. What are you going to do with the gold bar? People give value to what they want. So that's my opinion on that. The next thing I heard from Gary Vee, because he weighed in on this whole Reddit thing. He said that it's destructive behavior, which is a good thing. And he gave the examples of Uber. You know, New York City taxis, people bought medallions. They would sell their house and buy a medallion. And that market lasted for a long time. There was a lot of value in that. And that's fine. That's great. Then Uber came along and they decided, we're going to do it a different way. We're going to do something that's disruptive to the old way of doing something. And those taxi drivers, some of them didn't make the transition and they got stuck holding the bag, but that's fine. It's a free market. Should be able to progress in the world and technology. Then Gary Vee talked about Amazon. Old bookstores. You used to go to a bookstore. Amazon started selling books online. Did anyone stop Amazon from selling books online? No. It turned into this great, huge company. And it was all because they were allowed to innovate. They were allowed to push thoughts forward. It's the same way as Reddit. It wouldn't be any different if you collected 100 of your friends. If you wrote everyone a letter and said, guys, we're going to meet at the park in Brooklyn on February 1st at 2 p.m. You got 1,000 people to join. And then everyone said, all right, guys, we're all going to buy GameStop stock. Reddit's the same thing. There's ease of motion. It facilitated. It sped up everything. The friction of communicating is now lessened. So I don't see an issue with that. Gary Vee is correct. The next thing, you can say what you want about retail investors, but overall, and I don't know if this is for everybody, but I know for myself, I've beaten the S&P. You know, with knowledge that I have, that I learned from YouTube and stock groups and Facebook and social media, my portfolio's doubled over the last year. And yes, you could say, oh, everyone bought in March and everyone's doing better. But the S&P didn't double. My portfolio doubled. I know a lot of people that more than doubled. So how are you, old school investors, going to tell us that we're not doing something right when we beat the index funds that you guys, old-time investors, think we're so, that's the right way to invest. You invest in an ETF. You know what? That's fine for some people in some situations, but that's not for everybody. Not everybody has to do one single way of investing. So that's my opinion on that. Secondly, everything that we do is a risk, and everyone should be aware of that. People in GameStop, like I said, you buy at the highs. You know that there's a chance you're losing money. You don't put in your last dollar, or you shouldn't. But I guess if people do that, then they're leaving themselves open to be disappointed with the end result. But everyone understands the risk. You take risks every day. You buy Super Bowl boxes. You do all this other stuff. You gamble. You buy lotto tickets. How is this any different? So my next thing now about crypto. I was listening to CNBC again, and they were talking about Dogecoin. They didn't even see. Here's the new wave again. Cryptocurrency is the future. People believe it to be the future, so it will become the future. I don't know how long it's going to take, and I could be wrong. Maybe it doesn't. But at this point in time, people believe that this is the coming future. We could talk all day about the dollar lessening and how there's a global currency that needs to be established, this and that. But this all goes back to old school. They don't understand what they don't understand, and if they don't understand it, they don't find value in it. This person on CNBC, they called it dog coin. They said it's a coin made up for a dog. You know what? That's correct, but they don't even know what it's called. It's Doji, not doggy, whatever they called it. So they just don't know, and they don't want to know. So that's the other part of this new wave. They don't want to adapt to new technology, and that's fine, but they will be left behind. Last, the new wave is being manipulated and censored. So a perfect example of this is Facebook took down stock pages that talked about GameStop. So how there's no freedom anymore. And this is another whole discussion and another whole topic. But basically, it all lends to this new wave of investors that are not being allowed to do what they do. Why can't we talk on Facebook groups and talk about the stocks that we want to buy? Again, it all goes back to the risk that people are willing to take. But if you're going to censor it, if you're going to take down pages and you're going to limit people on what they're allowed to talk about, then it's just going to be bad overall for the market. So, sorry if I rambled on. Sorry if I ranted a little bit. But overall, my opinion is that there's a new wave of investor. It's not the simple set it and forget it days anymore. People are looking for quick turnarounds. They're looking for bigger returns. And they're willing to take more risks to do that. And the market needs to adapt to that. And people, old school investors, need to adapt that their way is not the only way. So let me know what you guys think in the comments below. Tell me what you think. Please subscribe. Like this video. Help me to send this and create more awareness to a new breed of investors. Send it to people that you know, and let's just have this conversation about this new way of investing, guys. All right. Thanks again for listening to me, and I will see you guys in the next one.